Hey traders! Welcome back to the channel. Today, I'm going to walk you through one of the most profitable day trading strategies you can use in 2025, the Larry Williams % EMA strategy. This setup is powerful, simple, and built to give you consistent results. Stick around as we break it down step by step and show you how to crush it in the markets. Let's start by laying the foundation with our strategy. Remember, every trade begins with understanding the trend. Here's step 1 for the buy setup. Step 1. Check your trend. On your 15-minute chart, add two exponential moving averages, the 12 EMA and the 50 EMA. When the 12 EMA crosses above the 50 EMA, we're looking for bullish trades because it indicates a strong uptrend. On the flip side, if the 12 EMA is below the 50 EMA, we focus on bearish setups which signal a downtrend. This step is critical because it sets the stage for every trade we take. Without the trend on our side, our chances of success are much lower. Always remember, trend is your friend, and these EMA make spotting it simple and reliable. Step 2. Williams % indicator. Next, we bring in Larry Williams' famous %R indicator, a powerful tool to find market reversals. On the 15-minute chart, look for the indicator to dip into the oversold zone, typically below -80. This means the market has dropped significantly and is primed for a bounce back up. What makes this indicator special is its ability to detect hidden opportunities when the price is moving against the trend temporarily. Pairing this with the EMA setup filters out bad trades and focuses only on high-probability setups. Remember, it's not just about being oversold, it's about being oversold in the direction of the trend. Step 3. Wait for structure shift. Now, here's where the strategy really comes together. Once you've identified a bullish trend and oversold conditions, shift to the 5-minute chart. What you're looking for is a structure shift. This means higher lows forming and the market showing signs of strength. The most reliable entry comes when you see a breakout above recent resistance levels. This breakout confirms that buyers are in control and momentum is on your side. It's important to stay patient here. Don't rush into a trade until you see a clean structure shift, as this step eliminates most false signals. Step 4. Risk management. Finally, let's lock in our trade with smart risk management. Place your stop loss just below the previous swing low to protect yourself from unexpected market moves. This keeps your risk controlled while giving your trade enough breathing room. For targets, aim for a 1 to 3 risk-reward ratio. You're risking $1 to make $3. This ensures that even if you lose more trades than you win, you'll still end up profitable. A key rule here is to always risk only 1% of your account per trade. That way, even during a losing streak, you can stay in the game and trade another day. Let's see our sell setup. Step 1. Check your trend. We start by confirming the trend on the 15-minute chart. Here, the 12 EMA is clearly below the 50 EMA, confirming a bearish trend. This tells us we're only looking for sell setups. Notice how the price has been respecting the 50 EMA during pullbacks. Each time price tests this area and rejects it, it reinforces the strength of the downtrend. This is exactly what we need to see before moving to the next step. Step 2. Williams % indicator. Next, bring up the Williams %R indicator again, but now we're looking for overbought conditions. On the 15-minute chart, look for the indicator to rise into the overbought zone, typically above -20. This means the market has moved too high too quickly and is likely ready for a pullback or reversal. When combined with a bearish trend, it's a strong signal that the market could turn downward soon. This step ensures you're trading at the right time, not just randomly jumping into a sell. Step 3. Wait for structure shift. Once you've identified a bearish trend and overbought conditions, switch to the 5-minute chart. Here, you're waiting for a structure shift. This means lower highs forming and the market showing signs of weakness. The ideal entry comes when you see a breakdown below recent support levels. This breakdown confirms that sellers have taken control and the momentum is on your side. As always, be patient and let the chart tell you when it's time to act. Rushing leads to mistakes, and mistakes cost money. Step 4. Risk management. Now it's time to manage your trade responsibly. Place your stop loss just above the previous swing high to protect yourself from a reversal. This keeps your risk low while giving the trade enough room to develop. Set your target with a 1 to 3 risk-reward ratio. Aim to make $3 for every $1 you risk. And of course, keep your position size under control. Always risk only 1% of your account per trade. This keeps you in the game even if a few trades don't go your way. Let's quickly see our example for the buy setups. Alright traders, let's dive into a live chart example on USD CAD from December 2nd at 2 a.m. New York time, which falls within the ICT London kill zone. This is a key session where liquidity and volatility often provide excellent trading opportunities. Step 1. Check your trend. First, let's confirm the trend. On the 15-minute chart, we can see that the 12 EMA is positioned above the 50 EMA, indicating a bullish trend. This means we're looking for potential buy setups. Notice how the market has been trending upward steadily. This is exactly what we want to see before switching to our 5-minute chart. Step 2. Williams %R indicator oversold. Now, let's bring in Larry Williams %R indicator. At 2 a.m., we can see that the indicator dipped below -80, signaling oversold conditions. This tells us that despite the bullish trend, the price temporarily pulled back, creating an opportunity for buyers to step in. This step ensures we're not chasing the market but instead waiting for a high probability setup. Step 3. Structure shift on 5-minute chart. Next, we move to the 5-minute chart to fine-tune our entry. Notice how at 2:15 a.m., we see a breakout above a recent resistance level, confirming a structure shift. This breakout shows that buyers are regaining control and the market is ready to move higher. This is where we place our trade. We enter just above the breakout candle, ensuring we're aligned with the bullish momentum. Step 4. Risk management and patience. For our risk management, we set the stop loss just below the previous swing low to protect against unexpected reversals. Our target is set at a 1 to 3 risk-reward ratio, meaning we're aiming to make 3 times what we're risking. Now here's the critical part. Notice how the price doesn't immediately shoot up to hit our target. Instead, it consolidates for about 4 hours before finally starting to move in our favor. This is where patience comes in. Even though the setup is valid, the market doesn't always reach the reward quickly. Trust your analysis, follow your plan, and avoid the temptation to close the trade early just because it's taking time. Alright traders, let's walk through a sell setup example using Euro to US dollar on November 22nd at 3 a.m. New York time, right in the ICT London kill zone. This session often provides excellent setups due to the increased liquidity during European market hours. Step 1. Check your trend. We start by confirming the trend on the 15-minute chart. Here, the 12 EMA is clearly below the 50 EMA, confirming a bearish trend. This tells us we're only looking for sell setups. Notice how the price has been respecting the 50 EMA during pullbacks. Each time price tests this area and rejects it, it reinforces the strength of the downtrend. This is exactly what we need to see before moving to the next step. Step 2. Williams %R indicator overbought. At 3 a.m., price pulls back and tests the 50 EMA and the Williams %R indicator overbought. This is an important step because it confirms that the pullback is valid and aligns with the trend. Without this touch and rejection, we wouldn't have the confidence to proceed with a sell setup. Think of the 50 EMA as a dynamic resistance level in this case. It helps us identify areas where sellers are likely to regain control. Step 3. Structure shift and breakout on 5-minute chart. Now, let's move to the 5-minute chart to fine-tune our entry. Shortly after the pullback, we see a structure shift. The price starts forming lower highs and eventually breaks below the recent support level. This breakout candle is our signal to enter the trade. By waiting for this confirmation, we ensure that momentum is on our side and avoid entering too early during the pullback phase. Step 4. Risk management and patience. Once the breakout occurs, it's time to manage our risk. Place your stop loss just above the previous swing high to protect against potential reversals. Our target is set using a 1 to 3 risk-reward ratio. We're aiming to make 3 times what we're risking. Now here's where patience is critical. Notice how the price initially moves in our favor but doesn't hit the reward target immediately. It takes over an hour for the price to finally reach the target, but by sticking to our plan, we avoid the temptation to exit early and let the trade play out as expected. Let's recap the buy steps. 1. Check your trend with the 12 and 50 EMA on the 15-minute chart. 2. Use the Williams %R indicator to confirm oversold levels. 3. Shift to the 5-minute chart and wait for a structure shift. 4. Enter on the breakout and manage your trade with a 1 to 3 risk-reward ratio. Let's quickly recap the sell setup. 1. Confirm the bearish trend with the 12 and 50 EMA on the 15-minute chart. 2. Use the Williams %R indicator to spot overbought levels. 3. Shift to the 5-minute chart and wait for a structure shift. 4. Enter on the breakdown and manage your trade with a 1 to 3 risk-reward ratio. If you found this live breakdown helpful, give this video a thumbs up and share your thoughts in the comments below. What strategies are you finding most effective in the current market? And if you're new here, don't forget to subscribe for more actionable trading insights, strategies, and live examples like this one. Thanks for watching, God bless, and I'll see you in the next video. Let's make those trades count.